Hi, everyone. Welcome to Analyze Your Trade, episode number 34 for May 15th, 2018. Over the last few days, about 40 people have submitted up to 5 symbols each, and I've put the list together that we're going to talk about today. So you should see that on your screen while I'm talking right now. My name is David Kosmeter. I'm the creator of Timing Research, and I developed this show with Dean Jenkins of Follow Me Trades, but he's off this week as moderator, so I have Michael Filighera here, and I'm going to go ahead and turn it over to him.
Thank you, David. And good evening, good afternoon to everybody that's come in and joined us today. I feel that we've got a pretty good show to go over, so we're going to dive right in. And first thing up, we're going to do kind of round robin style, and we're going to start with Jim and then Mike. So we have Jim Kenney with us today, and we have Mike Pisani with us today. Both I enjoy so much doing the shows together with, and so I think we're going to have some fun. So why don't we just do a round robin, introduce yourself and what you're doing and where you are, and then we'll just move on. So Jim, starting with you.
I'm Jim Kenney, and I do provide the content over at OptionProfessor.com. It's a company that has 7 DVDs for education on options, and it covers everything from the beginning and intermediate advanced strategies, and it's using the options for both limited risk speculation as well as using it for cash flow income purposes and then hedging purposes. So there's a lot of different things to learn and a lot of different ways to use the options on a daily, weekly, monthly, and long-term basis. So that's what the Option Professor is out there trying to do, is inform the investor so they know what they're doing.
Great, thank you very much. And Mike.
Hey, Michael, Jim, David, thanks for having me. Always love coming on this show with you guys. Different opinions, lots of fun conversations. I own a small company called SmartOptionTrading.com. I do option flow throughout the day, my trades, news, and mostly I sit there and do a lot of teaching. So if you're looking to learn, I do offer teaching on how to trade options, how to trade the markets, and mentoring. You can also find me over at Alpha Shark. I do go over there every day, and I do a moderating the chat room there for about 2 hours a day. So you can find me sitting in there. Mostly I trade options, but I also trade a lot of common stock off of option flow. So you'll find me doing that also. So if you're interested, check out my website, SmartOptionTrading.com.
Thank you very much. And I'm Michael Filighera. I am the proprietor, starter, owner of LogicalSignals.com and also MGF1Partners.com. And what I am a past market maker. I was an options market maker on the Pacific Exchange. I was an options market maker on the London traded options market and also on the European Options Exchange, and then came back to the Pacific. I've retired, and basically now I have core positions, but I still have a great interest in options, but I pretty much stick to trading futures and have my own theories on all of that good stuff. As we begin going over these particular stocks that have been submitted to us today, since we all have experience in options, and I really love having Jim and Mike here today, and hopefully as we're discussing these individual companies, if you have an options trade or a particular position that you think would be a good one to put on as you're doing your analysis, I would like to suggest that maybe we kind of go into not a great of detail, but some additional detail on what that position might entail. So kind of expanding maybe a little bit and seeing what we can come up with here. Okay, so let's kind of jump in, see how many we can get through today. We have some new ones that I've not seen for a while. And the first one is Turtle Beach Corporation, and that is symbol here, HEAR. So we'll keep the same order, and we'll start with Jim. And
yeah, just give me one moment here. I just punched the wrong one in. HEAR.
Yeah.
Okay. Basically, it's a stock that today obviously went through the roof. It was up about almost 20%. So certainly something's going on. Precision Products is their industry group. I'm not that familiar with the company, so I'm going to look at it from a technical point of view. And today it did volume of almost 12 million shares, and the average daily volume on this is 50-day is 1.7 million. And on the 200-day basis, it's only 486,000.
Wow.
So just being the guy who fell to earth, something very big happened in HEAR today, because the volume is getting to be almost 8 times what it normally is on a 50-day basis, and even way more than that on a 200-day basis. 50-day moving average on it's at $4 about. 200-day average is a little under 3. This thing's up at 17. It is flying like a kite. If you're in this thing and you have any idea what's going on, obviously you're on a fantastic ride here. Basically it's got a P ratio of 24-1, so it's not tremendously bad. It's got earnings, so it's making money. Short interest was 6.49. I'm sure those people aren't very happy, since short interest are people that are shorting the stock. There's at least 6.49 people who are probably not too pleased. But and I'm also trying to see real quick here if since it's been such a cheap stock until recently. I would doubt it's optionable, but stranger things have happened.
They don't have options.
Okay, they don't? Okay, so it's not optionable. Of course, obviously, the first thing you'd want to possibly think about doing is putting some kind of a hedge on, either, with some type of married put if it wasn't too bad, or maybe some kind of a collar or some type of an approach to try to make sure it doesn't come back into this huge gap, which is between 8 and about 11. So there's a big gap on it between 8 and 11. Could it go back in there? Anything goes up parabolically, obviously it can go the other way as well. But I am not in a position to tell you why it went up today, because I don't have that in front of me. I would say this, though, that it is by all measures getting very, very much huge volume in it. And so, stepping in front of it would make not much sense. And starting to buy it up here would take significant huevos rancheros. So I would say if you're in there, enjoy your ride. And if you're not in there, enjoy watching people on the ride.
Yeah.
I mean, that's what I would say. That's just my opinion. If you know more about it, you'd be a better guy than me to talk about it.
I think it was a very educated opinion. So I liked it. And Mike.
Bye. No, just kidding, man. Obviously on April 9th, early April, something happened in the stock. It totally changed character. You had your first big volume wide bar, even though it was nothing like the volume we saw here. And then it started this big move up. I'd almost say they went blockchain, but I didn't hear any news on that, right? These are the type of moves we've been associated with companies that come out and said we're going to be going a blockchain type moves.
Right.
And 3 days ago they had earnings. So that's where that gap came from. That's
right.
where all that volumes come in. So earnings must have been great. I can't touch this up here. I mean, this is something to me that if I liked it and it pulled back maybe the 10-50 and held that earnings gap, I'd give it a shot. But up here, the risk reward is nothing to the downside here. I mean, it's 95 to 5% in your favor. It's heated. RSI is screaming at what, 87 at this point?
Mm-hmm.
I would need to let this thing chill out for a while and cool off, unless there's some special news that we don't know about, some buyout or something. But if a buyout's announced, it's probably already baked in. So I'm with you guys. I can't touch this here. I would just let it go. And if I liked it and I knew the news was good, I'd put some notifications on, start looking at it at 12:30 and then down at 10:50.
Well said. And I have to agree. Again, I have not really looked at Turtle Beach Corporation for a long time. And I'm kind of reading, as we all are, just kind of what is going on with this particular company right now. Now, originally, it was just an audio tech company. And, they did a lot of the hypersound brands. But I'm reading that this hypersound Clear 500P, which is a new medical device, and it's an audio solution that's directed for people with hearing loss. And so I thought that could be something. Maybe that's caught on, or maybe that really kind of changed their long-term picture. I don't know, because I agree with what's already been said, that in April, the beginning of April, we saw some spikes higher, but always retracing back. And that's where around, $4 to $5, $6 on the top side. Now we're talking that it's been above 19 today, and now it's, sliding back. My opinion is going to be in line with what's already been stated, in that I don't see that there's a whole lot that unless everybody knows what the news is, that there's not much to do outside of just either buying or selling this particular underlying stock. There are no options. I personally wouldn't know what I'd want to hedge against. You know, maybe they have a preferred stock, maybe they have warrants. I don't know. But if there was something to kind of do in conjunction with it, again, that might change the picture. I agree with what Mike said. And it's like, up at these levels, no. Because my gut would tell me I'm buying a top. But if the market kind of relaxes, pulls back into, you know, its trading range here and goes deep enough, and I like $10 as well. If it can get itself in to where it's going to come back and try to close that gap that it created at the beginning of the month, beginning of May, that is, then it might become interesting. And plus some additional news as to what's going on with it. So unfortunately, I don't know if that's with the person who really wanted us to talk about that one, if that's going to help out at all. Next up, though, is a stock that I know has options, and also is not something that I've looked at in quite some time. And that is MELI, Mercado Libre. Interesting stock. Got bonked on the head today. So again, we'll start with Jim.
Okay, stock is up at I'm getting some feedback. Okay, stock is up around 290 today, down about 783. It looks like on the close.
Yep.
And it's you know, obviously probably having some of the problems that other retailers may be having here, because its industry group is mixed retailing. And
retail was up
basically
today. It's big.
Yeah, but I'm talking about didn't Home Depot come back down and
Yep.
And so, you know,
they reported
anyway, whatever these guys are doing today is not good. It's losing money at $1.07 on its earnings per share. So I wouldn't put them into one of the great profit-making companies right now. And the moving averages all got blown out. The 50-day average is up at 351. And, you know, this 300 area, which was the highs of 2017, you know, it should be holding this area if you want to stay bullish on it, in my opinion. If you can't, because former highs of last year should be support. So if in this neighborhood it stopped going down, then it might be of some interest. But I wouldn't catch a falling knife here. But if you can sustain somewhere around this 300 level and then stop making lows, today's low is 284, so that's a line in the sand for today anyway. And let's see if that 284 holds up for you know, a few days or maybe a week, and then you can start using it as your line in the sand, and also this ballpark 300 area from last year's highs. So, you know, this thing's on the defensive, no doubt about it. It definitely is busted through all the moving averages. The volume is not exactly huge on this drop. It's actually less on a 50-day basis than it is on the 200-day basis. And although today's volume was a little bit high at 1.2 million shares, it's been averaging about 738,000. So today's volume for the sell-off was pretty good. But sometimes you want to see a high volume sell-off when it's getting close to the end of the drop, right? So I would view this as you're getting lines in the sand made. Today it's 284. You don't take that out tomorrow, and it can last for a little bit, and you start trading back above 300, then it might be of some type of interest at that point. But that's the way I would see it.
And I thank you very much. And Mike. So
they had earnings a couple days ago, but this stock has been declined now since it put that high in up around 415, right back about beginning of March. So this name does catch option flow, and it's usually really big. And, you know, the big funds play this. And when I pull this up, you can see where the option flow is, and you can look at the prices on these options, even as it's come in. I mean, these guys who play this, they play with big money into this name. This is not an easy name for a retail home investor to play with options. They're very pricey, very tough to play with. That said, at a technical basis on this stock here at this point, I actually think it's getting close to a bounce. RSI is tagging oversold, and when it does this, it tends to get some type of a corrective bounce. It's out of the Bollinger Band. It's way extended off the 8-day, putting a little tailing candle in here today. If I was going to play this, I'd look for some type of reversion play here maybe back to retest the 200-day, which it broke around 306, and then I would see what it does from there, because that's going to be a big test. I generally have a rule of thumb when stocks break the 200-day, if they can't retake it in 5 sessions, they generally want to go lower. So for me, I would look for maybe a bounce, reversion bounce back into the means here. But, 306 is about as far as I would look to take it.
Okay, I like that one too. Being the last in line to talk about these stocks, it's hard to be adding against what has already been said. But I really like the 284. I think that has to be the line in the sand. And what Mike said, I am totally in agreement with. And for others that use moving averages as number one, a signal giver, and number two, a line in the sand and where things might pull back. I'm in agreement all the way around that. I think that stock is ready for a bounce, and my first level again, I'd be looking for the stock to get back up, and at least if it can trade above the 200, then maybe there's a glimmer of hope, but it has to hold above it. If not, if it gets up there, can't hold it, drifts back down, but then comes up a little bit, then that's a point of entry for a short. So I'm going to agree with you on that. Noticeably, what I've noticed here is taking a look at options. The implied vol has, of course, exploded in the puts. You don't get to drop $10 plus and not get these kinds of reactions and volatility. So what I think is, like, if we are definitely looking for a stock that's has a potential to pop maybe $16, which is, it's on my screen, it says it closed at 290, almost 291. We're looking at 306, 307. So if we're looking for that, I mean, that's not a bad little pop. And if it can drop this fast in a day, it can rise up as well. And in that case, what I personally would be looking for as an X options trader is they're going to smash volatility. What we saw today was it coming out of calls and going into puts, but understand that it just price-wise, it's doing that. Volatility-wise, both seem you can take advantage of both. But in this case, since I'm looking for a pop higher, I likely might do a strangle on this one. And strangle is doing put and a call. And I do kind of weird strangles. So I probably would try to take advantage of the volatility shift that I think is going to come. If we rally, it'll come out of the puts and back into the calls. So I would probably try to short some calls down here. And I would see which one is the most active. But again, you need to be aware of what Mike started this conversation about this company, and that it is not really a retail player. In other words, there's not a lot of smaller, the retail guys are not in this one. This is a big hedge fund and fund traded options and stock. So we're going to leave it at that and go over to Walgreens, WBA.
Well, Walgreens, we all know it. They've got a huge, obviously, distribution system here, and we also know it if you've been following the stock that has been going in the tank. So what would make it be coming down so steadily? It must be some paranoia about possibly what the administration may do for retail drug prices, and maybe that'll cut their margins down. And of course, if that cuts their margin down, people don't want to own it. And people since 2017 have been saying they don't want to own it. The low for the 52 weeks was made this month on May 8th and went down to 61.5 ballpark. Company's still making money, and the yield is almost 2.5. So people who buy it, they might at least appreciate the fact they're getting paid to watch this lousy movie. 2.5%. But the volume seems to be a little bit lighter on the 50-day basis, 5.6 million shares a day versus 6.2 on a 200-day average. So, there's been no high volume sell-off capitulation, doesn't look like. And the moving averages are inverted at 65 and 72. So does it look like it's deteriorated down quite a bit? Yes, it does. If you wanted to play it for a bounce, your line in the sand would be that 52-week low at 61.5. And then where could it go up towards? It might have trouble right around that 70, 72 mark on the 200-day. But technically, it certainly does not look very good. But it does look like something that if the news were to change, you could get a counter trend rally here in Walgreens. But this thing has depreciated from the 90 level down towards 60, which means it's lost almost 33% of its value. So if you wanted to sell it, it seems like you should have done that already. And if you're looking to buy it, you're probably looking for the market to show a little bit of stability. Again, 61.56 was done on May 8th. We're only a week away from there. So it hasn't been a lot of real estate time-wise between the low and where we are now. So, and today's volume, was light again, 4.2 million shares. So it is running out of volume a little bit as far as, it's drying up a little bit. So I don't know if that's an indication that we could be near this low. But right now, the 61.5 has been the low. If you want to trade off of that number, that might be something to do, but it's a downtrending stock.
Thank you very much. And Mike.
Jim, I love the payment for watching this movie. That was a great line, man. That was awesome.
It's a very bad movie, but you're getting paid to watch it.
You're getting paid to watch it anyway. This is a name that when they want it, they will come for it in the options market. And we haven't seen that. We saw a little buying here and there in CVS, right, one of their competitors. But I think you brought up the point that, Trump gave his healthcare speech on Friday, and that started this pop, right, a little bit. We saw that big wide range candle last Friday, and then a move yesterday with the rest of pharmaceuticals and biotech moving up. But they couldn't sustain it. And these names, when you look at biotech and pharmaceuticals and healthcare stocks right now, they're all in that nasty spot of unknowns, and most of them are trading near their 52-week lows. So if you're dumpster diving, you got to either be patient or have a tight stop on it, right? And to your point here, it put a nice bottom in a little bit there. RSI is trying to get a little bit of a higher move on it here, but it still can't get above 50. And the 50-day is right there at 55.63. And this thing has not closed over the 50-day since all the way back, if you look at this chart, in February, right? Early February. It can't get a close over it. Every time it gets close to it, it sells right back off. So if you're looking, I would try scalping it there as long as we hold this area. I think, Jim, you said 54 is a good number. It has to hold. I think I like that. I just don't see the catalyst right now until we really know more about what's going on. I don't see a massive catalyst unless they go, unless this market rotates back into this sector hard. I don't see a big catalyst here. I think I'd be careful with it. I'm not sure I'd short it down here, but I don't know I'd be looking at going long it.
I was going to ask you guys if you have more knowledge about this area. If the volume is drying up a bit, would you consider that bullish, bearish, neutral when you got a stock that's gone from 90 down to 60?
If it was drying up, I would think that most of the selling is done. I think I would look at it that way. But funds, right? They don't buy; they buy over time. What I'd like to see if they really wanted this stock, it would be consolidating for a period of 3 to 6 months in a tight range and create a base, and that would mean that the funds are accumulating, right? And we haven't seen that here.
No. Just in that vein, Jim, Mike and I were talking prior to going live today, and Mike, maybe you might want to just touch on that in relationship to what you have been seeing generally with volume, and what's lacking and who's been absent, and so that kind of puts something together for us that where we believe this volume is being generated from. I think that's a very interesting conversation, and I think it might be appropriate for right now.
All right, Michael, be happy to. So if you don't know, most of the institutions do a lot of their buying and selling in the last 10 minutes of the day. It's called market on close. And they queue this up all day long, and they go into it. And for the last 2+ weeks, it's been a big imbalance to the sell side. And what that means is that, even though we may not close lower, the money the institutions have queued up is geared to the sell side. Usually it's been anywhere from a couple $100 million to a couple billion to the sell side through the last couple weeks, which is big, right? Anytime you start approaching 600 million to up to $1.5, $2 billion, it's a lot. So one thing I've noticed is the volume on this move last week was very, very light. And that tells me today that the funds are selling in the final minutes. It's algos, maybe some funds, some hedge funds buying, but the big institutions to me, they don't look like they're buying into this market yet. And that's the one big red flag I still have after this, another nice hold at the 200-day and big bounce, is that the institutions don't seem to be coming in saying we want to own things here. If anything, it looks like they're still selling here in this market. They're still selling and getting out. And that creates a concern for me that all these bounces, you still should be taking your profits quick, protecting your profits at all costs, because I just don't know that this is over yet. I mean, we're in a good spot. If we, for me, I look at the SPY. If we were to hold here tomorrow and reverse and start going up and saw some real buying, I think that'd be great. But when you look at this market, any volume is always on down days. On the up days, there's almost nothing.
Right. Thank you. I'm in such agreement with what Mike has just presented, and also Jim, and what you were adding just prior. These are very important tidbits to bear in mind, that particularly if you're day trading or if you're sitting and you're watching the market, and particularly like today, as you're watching the closing minutes come in and you're just seeing that these indexes are skipping up, in the Dow, it's moving up $50 to $100. We say points, but really look at it, these are dollars. It's moving in dollars. And in the NASDAQ, you're watching this thing flip up $50 to $60 to $70 in a matter of minutes. And that just really kind of tells us the thinness in the market. Now, I kind of want to just add into that, when Mike was talking about the algos, those are the algorithmic traders. We have many firms, large and small, that they come in the morning and they turn on their algorithms, they turn on their computers, and what those computers do is search, execute, search, execute, search, execute. And that's what they do all day long. So if these algorithms are coming in at the end of the day and they're just buying, it's because they already have the other side. They have already, they're just basically hedging, or they're putting something together. And so that can be very misleading in and of itself. So I think it's more important, and that's why I wanted to talk about it now, is to realize that when the larger players are in there and they're coming in as a seller, then in my mind, even as a day trader, my mind begins to tell me you need to pay attention to what the bigger money is doing. And the bigger money since January, in my mind, has been selling. Having said that,
by the way, great point. They have been taking money out of this market. As we came up in January, the big funds were selling.
Right. And when those in January and February, those down moves were heavy duty. We saw size being traded across the board. And I think that was important. And then since then, and particularly the last month, we're looking at, and I don't want to say in the good old days, but
summer.
Yeah. Well, summer volume a little bit early. It came in spring.
Yeah.
So what is that? What's the warning there? That the participation, either everybody's real pleased with their positions and so they're just sitting and waiting, or a lot of money's coming out and they're not putting it back in yet.
They're worried about something. Something's got them nervous.
And I agree. And I think there's enough out there that we can pick and choose to what the market may be worrying about. But I think more importantly here is that when you're seeing low volume coming in both directions, then when you're seeing the larger players come in, things are going to nosedive. If they're sellers, things are going to nosedive a whole lot quicker than this fight to push it back up. But under thin market conditions, you can see a 200-point drop followed by a 150-point rally, and still on no real volume on the way up. Okay, let's quickly move on to the next one, and then we're going to do kind of a round robin on maybe some favorite trade ideas or favorite stocks. Our next one up is Microsoft. Huge stock, huge traded stock. Options have great open interest, et cetera, et cetera. So, Jim.
Well, Microsoft, by any measure, has been going up, and up. Its P ratio is at 54 to 1. And I was listening to somebody who was a valuation kind of specialist, and his firm is short a lot of what he called the feeling good stocks that are a P ratio 50 or 100 to 1, because he thinks that at some point people will be feeling less good. And when they feel less good, they'll stop buying these things as proficiently. I was thinking out loud here that this company here is probably going to be a proxy for what the major index does. So if you are a believer we're going to blow out the recent highs of 2750 ballpark on the S&P, then you'd want to be long this stock. And if you're a believer that this drop to 2700 is just getting a bounce off of it, and by Thursday, Friday, or next week we'll be taking out the 2700, then you'd want to be out of this stock, because this stock will, in my view, come down if we take out the 2700 and go back in the soup. And it also can jump to 105 probably if we start taking out the 2750. So it's really going to live and die in the short run by, I think, what these major indexes do.
Okay. Thank you very much. And I think we need to add here is that 98.69, which was yesterday's high.
And one last thing I did want to add real quick is that the 200-day average is at about 84, so you're about 15% above the 200-day average. That's kind of overbought, but it's certainly not obscenely overbought. But it certainly has a little bit of real estate between 98 and 84 that it could come back into if the indices are going to, break down from this short-term run that it's just had. So, Microsoft is a big proponent of the big indexes. So obviously, if the indexes go one way or the other, people will obviously, doing something with Microsoft.
Let me ask you, because being an observer of which moving average is at 84?
200.
The 200 being at 84, and the stock
ballpark 84, 85.
I'm sorry, say that again?
I say ballpark, 84, 85, yeah.
Okay. Which can be a line in the sand coming down, but not being that overbought, I think it was how you stated it. And,
15% is certainly, that's a bit overbought. It's just not obscenely overbought like something like a Netflix would get, or, something like that.
But
or the first stock we looked at that's up at 17,
Correct.
Yeah.
But if we were looking at this in terms of 15% not being that overbought, and I agree with that in terms of how we measure things technically. But if we're looking at a market that's basically trading on thin volumes, 15% overbought can be more dangerous in terms of being, too high, and the fact that the stock is making all-time highs again. Could there be some correlation there at all?
Well, like I'll give you an example on Home Depot. Home Depot went down to its 200-day average around 170, and it was a very good bargain down there, and it had about a $20 run off of that price. So that's why Home Depot at 170 was a lot more interesting than it was near 200. From the standpoint of risk reward, from the standpoint of getting out pretty quick after you get in. Here, you're talking about 98, and if you're going to use 84, you're talking about a $14 hit, and that's a pretty good size hit.
Okay. Great. Thank you very much, and thank you for the extended explanation. Very helpful. Mike.
So this has been one of the anointed names that they constantly come for. The last week or so, it's been the June 9750s and the June 100 calls they've been kind of piling into in addition to weeklies. If you ask me, I think one way or the other, and I actually thought it was going to happen yesterday, we get to 100. That said, it's a tough name. This name is going all over. It's got room to run here. Short term, it's not overbought in any ways. This thing could go. The other thing I want to point out, guys, it's monthly options expiration week. And we always see tons of games in the market coming into this week because first they want to shake everybody out before they move things to wherever they want them so they can get the best pricing for their options. And remember, most of this moving is because they sold those options to somebody else and they want them to expire worthless.
Right.
So they want you to stay in them or move them to where they are, but they want you to, get out and they want to keep their stock and get you paid the full amount in the options. So, I'm not surprised that we've had this day and a half dip here at this point in the markets into this. And it wouldn't shock me if we shot right back up into the end of the week as they came back and said, okay, we want to move everything up to this point because this is where we get the best value out of everything for our positions. The other thing going on today is right now you're getting a bunch of 13Fs. So all these hedge fund managers are releasing what they've done in the first quarter, what positions they added to, what they sold, and what they started with. I haven't seen anything on Microsoft yet, but I saw a bunch on Apple and Micron and some of the other names out there. I like this name. It's one of the anointed ones. What they're doing in the cloud space is totally reinventing this company from what it was. And that's why it's getting treated differently. And I think, to your point, that's why it's 15% above the 200-day, because they're no longer just a software company. They're now a cloud company and taking on the big guys like Google and Amazon and in that space. So I would be a buyer of this name on any dips. If we were lucky enough to get another dip to the 50-day around 93.73, where it is right now, I would be taking this thing long. And if the market turns and rallies, this would be one of the first names I'd go to, because it seems to turn on a dime.
If you're going to buy it at what did you say, 93?
Yep.
Where would you put your stop?
If I bought it at 93, it depends how tight you want to be, but I would probably look at the bottom of the Bollinger Band, which is around 92.24 right now at the moment.
And that's off of what time frame chart?
Daily chart.
Okay, good. I like that stop. There's not really much I can add. You guys are good. I think in terms of the stock, I think it needs to pull back. But I agree with what Mike said. It's like, hey, we're moving into a monthly expiration, which is going to be a lot different than the weeklies that we have. So that's a little bit bigger, and that's why I agree that's why we have seen the market push higher, push higher, push higher. That expiration is Friday. And so I think a lot can happen between now and then. And I also agree with that, your larger players, and again, using the Microsoft options as an example, they're the ones that sold the 97.5s and the 100s. And again, today, but actually there was a huge volume in the June 80 calls. Wow, somebody needed to convert something. But in any case, outside of that, the two other largest strikes that traded were 97.5 and 100 in the call side. And the puts, they're kind of collecting or selling 95 puts. So we're watching them build that box on where we believe they're going to want to settle this stock come Friday afternoon. And I think that's what becomes interesting. I have nothing to really say about where I think the stock will drop to until it really begins to pull off. So I will go with, what was it, the 50-day? Was it 93?
Yeah.
And okay, so if it drops down to the 50, can dip maybe just below, kind of come back above, close above, then I think that, yes, I would buy it for a continued bounce and the possibility of new highs altogether. But I would drop that all the way down to probably an hourly chart just to monitor progression to see exactly what was going on. As far as the daily goes, I'm seeing some of my indicators, my momentum indicators, and others, like was mentioned, the RSI. You're just going to watch them nosedive, but it's just really following what's happening in the market. So momentum has turned and given a sell signal, but not really even approach what could seem like it's forming a bottom. So I would say that there might be some additional downside to come from Microsoft. It is a major player out there, and it's in the S&P, it's in the Dow, it's in the NASDAQ, it's in all the major indexes. So this is a big, widely held stock. It does have a lot of going for it because they have moved very strongly over to challenge Amazon and to challenge Google in the cloud space. So I think longer term, I'm always happy for Microsoft. I think it's one of our greater success stories and one of our blue of the blue stocks, I guess you could say. It's like IBM was always big blue. I think that we can now consider Microsoft right up there as a strong company. Let's take a few minutes here before we move on to our next stock, and let's kind of do a round robin, and maybe you guys have a favorite stock or a favorite options position that you'd like to talk about in relationship to a stock or even an index, however you want to do it. kind of give us a chance to kind of talk in that respect. So we'll start with Jim.
Yeah. Even just as early as yesterday, I was kind of explaining that my view on the stock market since the run-up in January was that the January parabolic move was kind of a blow-off, and that explains a lot about why these fabulous earnings and these fabulous reports are not generating a lot of further new action on the upside, because we discounted quite a bit of that in that January move. So since the January move, we've gone into a trading range, and my view, it's something like 2760, 2850 ballpark on the upside, and the downside 2650, 2580, something like that on the downside. So when and if you can wait for those stretch points to occur, you could consider a two-sided trade, such as a straddle or a strangle, to try to play it. And we've had about 4 opportunities to do it since January, which 4 is plenty. And basically, for those who rolled their position down when it was at 2,600 and change, when it ran up here the other day to 2740, which was, I guess, yesterday, that was the time to roll it back up and get your strike prices up in the 2740, 2750 area, and then look for this thing to either take out that area and maybe go up to 2,800 and change, or to roll over to the downside again, which it started to do. So, the two-sided trade, if you watch and wait for the stretch point and the premiums to come into a reasonable level, has not been the worst way to play a trading range market. But again, it takes patience to wait to get to the bottom or the top of the range, and then it takes some calculation to figure out how far out you really want to go, and then figure out how much you want to risk, and then add all that up, and then come up with an idea. But the two-sided trade at the stretch points is something that I have thought since January is a pretty good idea. And at this point, I still think it's a good idea because there's been no proof that we can take out that 2750 right now. So we'll have to see what goes on. And if we do take it out, and all heck breaks loose on the upside, that's why you've got the two-sided trade on.
That's right. Very well said. In fact, I'm applauding that presentation. That was really good. We have no reason to believe that it's just going to do one or the other. So as long as it's going to do this, then yes, you absolutely, you're kind of just picking your points, and you put on that two-sided trade, which is basically then considered hedged, which really is going to benefit you in the long run as a trader. And I just want to confirm that the market that you were referring to, Jim, was the S&P.
Yeah. And, there's been other big news kind of hitting the market, lately, like the Supreme Court and the passing of the ability to have sports gambling in all the different states. Yeah. And for the casinos that are exposed outside Nevada, they seem to have benefited from that a bit. So that was kind of a big news thing. And Sears divestiture has been kind of a big thing. Yes. And Qualcomm getting back into their takeover over there has been kind of a big thing this week. And then today, the two big things is the breakdown into new lows on bonds and the breakdown of the gold a bit down. I think those are two kind of large events to try to keep an eye on and monitor as well.
Agreed. And I will speak to both the bonds and the gold. But Mike, if that's, but I think I'm not sure. Now you're putting up the bonds. Thank you, Jim. That was actually, I enjoyed that. That was good. Mike.
So to jump on Jim, what he's saying, I agree. January turned out to be a little bit of a blow off top. Today's, by the way, bonds, we could thank Goldman Sachs for that. And that little article they put out that CNBC picked up last night talking about how interest rates were going to go up no matter what, and just basically put a bunch of fear out there. I mean, when was the last time we saw TBT gap up and run like it did today and the bonds fall like that? So that was Goldman Sachs putting the fear of interest rates into everybody last night after the market closed. But the point is here, right now, if looking for longs, I started telling everybody that follows me and this in my service on Friday, think before you take longs. We ran a lot last week on light volume, and think before you go long. And here I got to tell you, you got to watch. This magic 270 area on the SPY has been a point of control ever since, we got that first bounce in the markets. You can see how many candles have this come up and pinned against this, tops and bottoms of it. And this is a big area. If we cannot hold, and I don't mean by dip below it, I mean if we cannot hold a close above this tomorrow, then you need to start saying the door is now back open to the 200-day, which has been incredibly strong support in this market. So if you're looking for a short trade, the puts on the SPY, because of the range it's been getting and the volatility going up, have been paying dividends. It's been one of the best things to short. So if you're looking for shorts, try that. And if you're looking for a long name, the one name that I still think is just one of the best, I like other names too, is Square. What I love about this name is they just keep coming for it. Every dip, they come back. Today, it dipped to the 8-day and it gave you a hammer reversal candle. When this market was doing nothing all day, this stock was reversing, and it had okay volume, nothing special, but it held where it had to. They've been buying calls on this thing, June 60s, and especially the July 60 calls constantly. And more importantly, one of my favorite things in a name like this, they keep selling puts. And, you know, if you don't understand why I love put sellers, because whoever's selling them saying, I'm willing to take ownership of this at that strike price.
Right.
So when you see them selling these out there, they're not tied to stock. That means somebody's going out there. And today it was the January 50s. A couple weeks ago, it was the June 45s that got this run started. They keep coming out and selling puts against this thing. Tells me that this is not over. It may not be able to go to new time highs anytime soon, but it's not over. Somebody thinks this is going higher.
You know, this looks like AJ trade because I'm looking at the Jan 18s, or excuse me, the Jan 19s, and the puts they sold 1,238.
Yep.
Or they traded. Today in the June 50s, 1,552.
Yep. And they're selling these to open. These are being sold to open. And one thing this name has going for it too, forget the payment space, which is great. It's really starting to get traction. They're already working with Bitcoin, and they're the only guys out there that are taking that. And everybody wants to keep saying this is not going to work, Bitcoin's going to be horrible, blockchain. But you know what? If it works, these guys are at the forefront. And that means, you know what? Somebody's going to acquire them, because all these names like Visa and MasterCard are going to get caught flat and have to go scrambling to get into this space. And this is about the cheapest company out there to grab.
And it would have to be a hostile takeover, because this is a local San Francisco company. The same CEO as Twitter, it's Jack Dorsey. And this is his baby. And I am fortunate enough that I get a chance to speak with, you know, some of the folks that work at Square, that are engineers at Square. And they were talking about exactly what you said, Mike, that, you know, the moving into Bitcoin or the cryptocurrencies. And they're all very excited about doing that. So
they did it last quarter. They'd only made $200,000 profit on it, but they were trading Bitcoin last quarter as a currency.
Yeah. And they only made 200,000. Oh, well.
On $33 million, they made 200, but it's a start. I mean, they're figuring it out.
Yeah, exactly. The start. Yeah. Interesting. Very, very interesting. I actually do like Square. And at first I didn't, because I didn't hold out a lot of hope, but then they turned it around. And it proved to be, it's rock solid. I don't know, rock solid, but it's pretty solid in and of itself. Myself, just to speak a little bit, two core positions, and my core positions are I am short bonds and I'm long gold. They've been my core position for a long, long time, and they remain my core position. Now, when I take a look at gold today, yep, it hurts to see it drop $28. Hands down, I don't like it. But I'm looking up at the euro. The dollar lit on fire today. I'm going to give that credit back over to Goldman, back over to the people that came out and spoke negatively about interest rates. That's going to propel the dollar higher. It's going to kick the bonds down. We'll see if they recover tomorrow. We'll see about gold recovering tomorrow. Gold didn't really slip and fall on the biggest volume that I've seen when the major sellers come in. So I think it was a combination of gold, long-term gold traders realizing, you know, they read the commitment of traders report and they see where retail is sitting, where commercial is sitting, et cetera. And like so many traders in our markets, they like to go and shake it up a little bit and get the weak hands out so that they can go and do what they need to do. I felt I saw a little bit of that today as well. And I did see some strong buying today, even though, the market continued to decline. They were picking their points, and they were coming in, and you were seeing, they were coming in and buying 100 futures, buying another 100, buying another 100, and taking it up a little bit. But I need to say at the same time, the sellers were there as well. And they are probably still, I think gold, you got to buy it. When uncertainty hits, it's gold. Now, with regards to the bonds, I don't remember who it was, David, and if you remember, please help me out here. But we had somebody on, and I was on the show with them, and they were talking about the bond market being at 129, and that's going to be the long end. So it's going to be 30 years. So it's those tranches of 30, 20 to 30-year bonds. 129 in the that would be in the ZB future. And of course, I jumped for joy and said, yes, of course. But I don't know I don't know how long it'll take, but my thoughts are is that interest rates are going to go up. And I think we will reach a saturation point where they will truly start to fly. Now, today we had a little bit of retail sales, and so we continue to kind of see inflation. We've got crude oil going through the moon. And by the way, in crude oil, folks, next resistance is around 76, and beyond that, you're getting up to around 94. To true resistance on a longer term basis. You're going to have a lot of intraday stuff, of course, and a lot of challenges on the way. But this is, we're talking major resistance on the way up for crude oil. So, inflation is out there. Inflation is going to creep in. However they want to spin it and what they want to say, we can't forget that today, the long bond, the long future, slipped below 141, excuse me. And it's been a while since bond prices have been down. We've been so focused on the low interest rate environment that the last time bonds were below 141 was 2014. And truly below, and with any size, 2013. And then you got to start really moving back. You're going back to 2011, et cetera, et cetera. And so I think when it becomes that distant of a memory, people don't necessarily remember. This is a huge contract.
Michael, do you think you could chase this move though at this point down at this point in the bonds, or to the downside, or do you think it needs to bounce there?
I do agree with that, but I think that if we're really looking at a bond market that can drop another 11, 20 points, a lot of it, of course, is going to depend on how the Federal Reserve handles inflation. What do we see, happening? What's actually going to happen to the economy? There's so many factors that go in. Would I chase it? No, I would not. I think you can play shorter term moves using TLT, which I would go to. TLT, TBT. So TBT is the short bonds and TLT are the long bonds. So I think you can move into those markets and have a lot more success rather than just putting on a short bond position and sitting back and waiting. You'll have much more fun and probably much higher probabilities of and potential for profit. But I continue to hold them because I do not believe these moves are over. In fact, I would think that 1, 2, 3, 4. I think we may have just, in terms of this decline that started in September of last year off of the high at 158.09. It looks like it's now done 5 waves down, and that would be to today's low. which would indicate that we're going to get a bounce, and that bounce likely might take us back above to 146, up to about the 149 level. So that's playable from the long side.
You know, we have like 5 minutes left, and we got through 4 stocks.
You're right. And so, okay, guys, you guys pick one, and then we're going to go there, and we'll start it.
But I agree with you on bonds. I don't think this moves over. I think you wait.
Well, I agree, but we could talk for days on bonds, or I could, and that's not what people came here today for. So thank you, Mike. What Symantec? We haven't done that one in a long time. SYMC.
Yeah, that I was looking at that while you guys were talking, and I could see that this is a company that got whacked very, very hard. It was in the 34 range in the last 52 weeks, not that long ago. And it has really been hit hard, went down to as low as 18.5. And that 1885 wasn't a whole lot a long time ago, like last Friday, huh?
Yeah,
so it's having a bit of a bounce right now, but this is a company that obviously has had some very, very difficult news hit it. You guys could fill us in on what that is a little bit better. If it bounces back up, it might be able to get towards this 25 level where it fell from. That would be, I think, one of your best case scenarios as we speak. These moving averages are inverted at around 26, 27 on the 50-day and about 28, 29 on the 200-day. And the volume today was just mammoth. 36 million shares, and the thing generally only averages about 8 million shares on a 50-day. And so this company, people are just getting out and probably doing market orders from here to San Francisco. So they want out, and there's no doubt about that. And so you would just let this thing culminate down. Right now, your line on the sand is 1885. And a bounce back towards 25 might be the best case scenario. But this is the direct opposite of the first stock, HEAR. They're doing the direct opposite here. The volume is off the charts, and the prices are accelerating quite a bit on the downside. So, basically, that's where you're at. Do they have options on this? I haven't checked yet. It's optionable.
Huge options on it.
Yeah. So obviously the vol on the puts must be ridiculously off the chart, but the calls might be very tiny. And if this 18 can hold up for a little while and somebody moderates the news that have come out, 36 million shares sounds a little bit like capitulation maybe. So, if you want to take a stab on a reversal, just keep that risk limited, I think.
Okay. And Mike.
I'm going to be real quick. Hammered on absolutely atrocious earnings. They've been buying weekly calls on it the last 2 days into this blood, back into the gap here a little bit, reverted back into the Bollinger Bands. Maybe this thing can bounce up towards 2350 where the 8-day connects with it, but I wouldn't look for much beyond that right now unless they start going out of the weeklies on the options.
Very well said. Tight and compact. I'm not going to add anything to Symantec because I've not traded it in a long time, and I'm going to leave it to the two experts that we just had to talk about it. We got 1 minute. I'm sorry, we all went a little bit over on our trade ideas, but I think it might be worth it. So let's just again go around who we are, where you can find us, and anything exciting that people can pick up on.
Okay, well, basically optionprofessor.com. You can send an email over, optionprofessor@gmail.com. Learn more about how the options work through the 7 DVDs. Or if you have any other questions, you can shoot one over. We'd be more than happy to take that in. And as always, thank you, David, for having me here. And thank you guys for participating with us. And I think we covered a lot of material today.
I think we did too. Thank you. And Mike.
Again, Mike Pisani. Best way to get a hold of me, find me on Twitter, @OptionsMike. That's me on the screen there. You find that page, you got me. My website, smartoptionstrading.com, is on there. If you're interested in doing a trial, I do a 1 month for $25, renews at $100, cancel at any time if you're interested in that. Guys, it's been great being on here. I think you're right. A lot of information out there today talking the overall markets. And I think this is a spot to really pay attention and be careful and to think before you just blindly go long on things. Everybody have a great one and good luck out there.
Thank you. Thank you very much. Again, I'm Michael Filighera. I'm with logicalsignals.com. How about that? A little bit of a brain freeze. What I am really focusing on right now is that I am helping a former member of my own trade room really get started in her trade room. We are focusing on helping folks that are feeling that they're underfunded. We trade futures, and Natalie is extremely good at what she does. And so we're talking about risk management, we're talking about position sizing. And so I'm really standing behind this particular trade room for those that are looking for a place to come in and really learn some skill in trading futures with smaller accounts. So if you want more information, it's www.candlelightTrading, and it's LIGHT trading.com. If you have an interest in taking the trade room for a month, then I would say come on over and use the code LS100, and you will get $100 off your first month. And again, same thing, no commitment. So if you're feeling you're going to give it a try for a month and then you don't want to pass that, that's your choice. And on that note, David, thank you very much. This I really enjoyed. I enjoyed being together with Jim and Mike, and I think we put out some really good stuff today. So thanks.
Yeah, it was a great discussion. So just want to remind everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, for next week, the Monday Crowd Forecast News show will probably be canceled next week, but you can watch the website and newsletter for updates on that. But the next episode of this show, Analyze Your Trade, episode number 35, next Tuesday, May 22nd, 4:30 p.m. Eastern Time. I got a good lineup set for that. Fausto Puglisi and Todd Mitchell will be back. It's been a few months since they've been on, so it'll be great to have those guys back. Also, Jim Kenney will be back for that one, and Dean Jenkins will be moderating. So just want to thank my guests again for this week. Jim Kenney of OptionProfessor.com, Mike Pisani of AlphaShark.com, and Michael Filighera of LogicalSignals.com. Thanks, guys.
Thank you.